Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Thick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Thick on today's show. Going to be talking about this big stake in Tesla from Larry Ellison. Going to talk about the tech stocks rallying. Wouldn't you know it? We're back at new highs. Twilio, Roku, they both have momentum. We'll talk about those and other tech stocks that have some momentum as well. Going to talk about the news from yesterday about a potentially new, exchange to challenge NYSE and NASDAQ. So we'll talk about that, the implications of that from the major brokers, and we'll take your questions, as always, from our chats on YouTube and premarket.benzinga.com. Our guest today, Nick Shaheen, author of Create Income with Option Spreads. He will join us at 8:35. Joel, give us a word here on the overnight session.
Green on the screen. S&P's up 16 handles at 66.50. We went off the board at 50.50. That's 25.50.50. Only went $1.25 below that. So your pre-market low coincides with the close. That's a big level, 25.49 a quarter. On the upside, we've taken out Monday's high, went to 72. We're below that right now. That was 67.5, but still a good target on the upside. My big level on the upside today, if this momentum can continue, 25.92. That was your December 19th high. Crude still making that run at $50, up 63 cents at 49.15. You have gold in the red by $6.30, struggling near the psychological $1,300 level. Silver in the red by 11 cents at 15.64. And Bitcoin just kind of hanging out at 4,000. Let's bring Triple D in. And Triple D, you got some stuff working from the after hours and pre-market. What are you seeing out there?
Damage control today. I got some bad positions here. So when it's a trader, you're having a good day or a bad day, and you're rarely having something in between. So you just got to kind of go with the flow. Some days are going to be good. Some days are going to be bad. I tell you, it's been one of those years so far. This 2019 has not started well for me, and it's just because I've had some bad luck trades, like the Celgene. Obviously, I had my long-term portfolio worked out, but I had a bunch of other biotech shorts that day, just happened to overnight, which crushed me. So my 2019 performance, and obviously only 5 days into it, has been disappointing thus far. But it's just one of those things. I mean, it's one of those things. You go on hot streaks, you go on cold streaks. You get bad luck sometimes. Sometimes you just have news that comes out of the blue that works against you in an existing position. You know what? There's nothing you can do about it. You got to just kind of go with punches. December was one of my best trading months in 5 years. November was excellent as well. January of 2019 has been a very slow start for me and a very rough start. So looks like it might be one of those days here again. So if I leave the show halfway through, it's because I got to go get sick in the toilet looking at my positions.
All right. Well, I know what you're going to do. You're just gonna take your whole portfolio and your short term, your swing term, swing, and you're going long Tesla here. $1 billion stake taken here by Mr. Ellison. This stock is just on a tear here, so it's trading up 639. I guess I gave you the news on that. That's a pretty sizable stake, taking $1 billion in Tesla. What a big boost of confidence for the company.
Well, it is a big boost of confidence for the company. And we had the big boost of confidence when Ellison went to the board there just a week and a half ago. I think you were actually away when that was announced. So you knew Ellison was already in. You knew Ellison was probably putting his money where his mouth is. And now it's showing. He's proving where his money is, where his mouth is. But you know what? The stock is so resilient. Every time this thing falls 30 points, my Twitter stream gets lit up with the Tesla shorts and the Tesla bears. And they're saying, yeah, this is the time. You know what? Every time they're almost proven wrong. So it basically cut guidance 3 days ago. Thing goes down to $300. And you know what? 3 days later, gets all the losses back. The stock is so resilient. I think it's going to $500 eventually. So I am a Tesla bull. I don't own it because I just can't stomach tone it because we know it's a wild child. But I'll tell you, I'm a believer in the Tesla story. And I think it's eventually a $500 stock.
Think about the
It's going to be
year.
a rough road to get there. There's going to be lots of hiccups on the way. But I tell you, the stock is just, it's a honey badger stock. It's been a honey badger stock for a long time. It's actually either loved or hated. There's no in between on this one here either. But I think eventually the Bulls are going to win. I think Jason Raznick is going to win on this trade.
Think about the year that Tesla, the stock had, and not on the chart, but just in terms of the headlines, and it survived. And the fact that it's where it is right now is a testament, I think, to the Bulls. So I'd say the Bulls won. I mean, the fact that it survived, 420 from Elon Musk and SEC investigation and that whole disaster, and now it's right back where it was.
Trading at the highs of the pre-market session at 341.60. I'll just give you some daily highs here. December 19th, 347.01. And then your high on the 18th was 51.55. If this could ever clear 380, that was the level it got up to when, he talked about the buyout, and we got right back up to 378. This was back in December. I mean, that's just been a big level. The all-time high is above that, 387.46. But you got to think, man, if this thing ever breaks out of the top of the trading range, shorts are going to be buried in this one. It's still relatively it's a trading range. It's a big trading range, but Tesla on the move.
Let's jump over lots of other stocks here in the news, but I just want to go to some of these moves from yesterday before we start jumping into all the moves, because look at Roku yesterday. And this had news, I guess, right after 9 a.m., I guess right after I kind of went off to trade, but this was up 27% yesterday. I mean, some of these stocks that were beaten down, the beaten down tech names that were loved in 2018, they have been on the comeback trail in the last 3-4 trading sessions. None coming back more than Roku yesterday. I mean, we talked about this on the show at $30 a couple of days ago. It's $44. It's up another $2 here this morning. This incredible move here. Anybody who was short this thing is getting the hell squeezed out of them right now. That's an incredible move.
And it's moving up. We can do I think you mentioned the 50% retracement yesterday, Dennis. All-time high, let's call it 78. And then on that low, you went to 26. So it's a 52-point move. Let's call it 50-21. So 51-52 would be the 50% retracement on this one. And big old gap to fill on the dailies, too. I don't know if that was from earnings or a downgrade, but you are coming up to that gap area. But, man, tough to be short this stock.
Also, like just looking at Twilio, TWLO, a stock that obviously got beat up when everything got beat up. But you know what? These were the stocks that were loved and the ones that are coming back. Some of these cloud stocks, this Twilio is like $2 off the all-time high. Yeah. So what bear market for Twilio? There isn't one TWLO. I mean, I guess you got to think what, holds up the best eventually takes off. And that's what Twilio has done. TWLO, incredible move here, trade $99 here, $1.50 off the all-time high. Incredible.
Isn't that founded by a guy from Michigan?
Yes.
Yeah, he is. I think we did some articles on him. Yeah, great. I gotta ask you what they do. Networking? Or
no, it's like the technology behind like WhatsApp, for example.
Really?
As an example of their technology.
It's a beast, though. Let's see. It's all-time high. It did get over $100. That was, I remember, on earnings. All-time high, $100.47, knocking on the door here, up $2, just trading at the highs of the pre-market session. And also, haven't taken out yesterday's high yet, $99.40, so keep an eye on that.
Jumping over, and obviously I'm leading the way trying to trade here, so it makes it difficult. Okay. So just bear with me here, or if you guys want to take the lead because you guys don't have 50 positions in your portfolio, feel 49, free. 49. GWPH, actually no, that was one on my own personal trading list, and that was because we're at this JP Morgan Health Conference, and it had a nice move yesterday, which had a lot of biotech really taken off. Some had news, like we did have some news last night from a few, but I don't know if there's been individual movers, but overall biotech still remains hot. Maybe that was the AlloXO deal, just continuing to obviously push capital into the biotechs. But the JP Morgan Health Conference is day 2, and we know there can be some movers coming out of there too. Any highlights, Spencer? Was there anything said that you saw?
I didn't see anything super noteworthy. I saw some headlines from Gilead on what they're focusing on, but I didn't see too many. Normally, you see companies will announce drug data, like big companies will announce some big trials.
Did Illumina say anything? Because ILMN traded down 13 points here this morning, and I didn't go look at headlines myself, so maybe there was a separate headline here. But assuming there's something bad said,
I don't know if it's in the conference. Let me see here.
Illumina is down 14 points, so I'm assuming they said something.
They must have. Oh, you know what? See, yeah, exactly. So I'm talking about. They presented earnings at the conference. So
yeah, see, that's what happens.
You'll get companies who will like present earnings or give a big update on a trial or big headline worthy news at a conference. I didn't see too much of that from yesterday, but I missed the Illumina news. I don't follow them too closely. But that was from yesterday. Yeah.
ILMN trading down 4.5% here, 294. Maybe Joel can give us some quick technicals.
It is. It's trading deeply in the red here. You were beyond this area though. Odd lot printed at 286, so I'm not going to really pay much attention to that. Had a good day yesterday. Now reversing that gains and the prior day's gains. So 290.03. That's only $4 away. That was your low on Friday. We'll keep an eye on that. And then the recent low of the move, if they get really excited in this one, was 271. I just wanted to mention a stock that, Dennis, I think you talked about on the show at length at the beginning of the show, Bluebird Bio.
Yesterday.
Yeah. Interesting.
It was a buy.
It opened higher, and then it came down 3 cents below the close. I mean, you would have had to been very quick to catch that. Ended up trading up to 113.64. 114.97. So if you were looking for a sympathy play yesterday on the show, that was a nice one there in Bluebird Bio. And that stock still looks like it's had some room to run, at least when you look at it on the weekly. Was over $220.
I think some of these middle, smaller, like good names, but smaller biotechs are just going to be in play potentially here. Because if you're seeing M&A happen here, and it's the second deal we saw in 4 days, in biotech land, some of these smaller ones, some of these favored ones from a year and a half ago could potentially get bought because they're on sale. And that's why we were talking on Bluebird Bio here too. I would not be surprised to see a bid on that eventually. Am I coming here? I do not own it. No position there. It's a tough market to say, okay, I'm going to buy this because I think it's going to go or get taken over. But I wouldn't want to be short it. I wouldn't want to be short a lot of these biotechs. And I think you're seeing a little bit of covering here as well from probably nervous shorts that don't want to get Celgened. If you're playing the short side on that one, you got hit.
Right. And I also, referring to yesterday, Dennis, you made some great comments that, this wasn't that big of a deal for Lilly. And you looked at the market cap. It matched the previous day's low. Actually, it missed the previous day's low by 31 cents and then ended up green on the session. Added almost $1. 115.28 was the closing price. Now up $1.52. I don't know if there's any legitimate, some trading in that, probably just up with the sympathy trade with the market. Don't see a lot of shares trading, but Lilly holding up well despite, the acquisition.
Yeah. And again, if it's a small deal, you're talking Lilly market cap in the hundreds of billions, $8 billion deal, it's not going to affect the big acquirer.
Nope.
And that's why you see them shrug it off. It's the big ones when, Bristol Myers is almost a merger of equals with Celgene. They're paying a big premium. That's when they're going to knock the market cap down. So first thing, you're looking, when you're trading risk arb and, these deals are just happening and you're trying to figure out, ratios and trying to figure out, what the, risk arbs are thinking. Look at the size of the deal. If it's a small deal, drop in the bucket, it's not going to move the acquirer stock very much. And that's why when Lilly was trading down $3 yesterday, it was just overdone. And it came right back. So look at the size of the deal. It's always the most important thing to look at from a risk arb perspective when you're trying to figure out whether it's going to go up or down.
Bristol Myers on the rebound, though, since that acquisition. You did hit 44.30 in that session with a close at 45.12. It's tacked on $3 since then, 48.41, tacking on more this morning. Trading at right at the high from Monday. So that's a little bit of resistance. But if you're a gap fill trader here, the day the deal that announced or the day prior, 51.34. So a lot of a lot of air in BMY. So people licking their chops here after seeing it at a discount. Just seems things always like crawl its way back. And then, it's a bad drug trial or an acquisition seems to get it knocked back down again. But
Spoo's taking off.
what do we have? It's 816. I don't see any kind of number here.
Just pop 4 points.
There's nothing in there, Dennis. I mean, look, Spencer, pull up the dailies here. We came whooshing down in December. It's hard to remember back that far, but I have no daily high between here and 25.92. And if I don't have a daily high on my sheet, that means that it has to go right to that number.
It's thinner markets. We know that. We, just as, speaking, and I pass it to you, we give back those 4 points. So it looks like some data or something.
Oh, some takeoff. Oh, it crashed on takeoff.
Well, it must have been some data or somebody said something there because we just popped. Trump says talks with China are going very well.
Oh, there you go.
I heard
so
that.
That's what the headline was. Talks with China going very well. That was a tweet from Donald Trump. That was your catalyst there where it just took off, pulled back a bit, chop it around. So anyways, we look like we're getting closer to a deal than not a deal. And I mean, the biggest thing, which we've said on the show multiple times too, is he wants to do a deal because he wants the stock market to be higher because it looks better for his administration. He wants to talk about how well the stocks have done. And when stocks are going straight down, he's a lot more incentivized to get over there and start talking. So that's, he doesn't have as many bullets in his gun when the stocks are going down. So anyways, it looks like he wants to get a deal done. I think there will be a deal done. I still think it might be a selling opportunity, but you know what? This market's got legs here and this market run continues to go. I still want to see, I think we're eventually going to get that 260, Joel, on the S&Ps. That's what I want to see. That's what I want to see. What's going to happen there at the 260 level.
And the 50% is just above that. I mentioned that yesterday. That's at 2634. So there's good area and that good talk with Harlan yesterday. This is a rebound off the low, and you just got to wait to get back to some critical levels. Also, earnings season, right around the corner, right? I mean, that's going to be a big catalyst, and I think a lot of the shorts. That's the other thing too with the decline that you had. I mean, you had no chance that a double bottom in the SPOOs of that 23.16, and now 250 points higher. So shorts finally thought they had it. 2,000 in the S&Ps, and boom! Right now we're like I said, 250 points off the low.
I want to go back to tech for a second. A couple of names being thrown out in the chat, and then I want to hit on myself. Were AMD and Square, both same story, strong days yesterday, but give us sort of an update on where you stand now on those two.
Big moves. These have been big moves. You're buying these now, you're buying somebody else's profits. So, we've had big moves. Yes, there could be a trade deal announced here. Yes, you could have a little bit more upside. Yes, there's room to 70 on Square. Yes, on AMD, there's probably room to that high that we hit back there all the way to 23.75, which is the high back on the third. But, where are we coming from? 7 days ago, you're at 16. So now, you're looking at a risk reward perspective, and it doesn't set up nearly as well at all. So Square, we were saying, the thing bottomed at 50. It got back down to the 52, 53. And I think I said on the show that day, I didn't do it, but I said, if you want to set it up, you got to stop out at the low. You stop out at that 50 or whatever it was, 49.82, and you go for it. That was when the stock was $53. You know what? That would have worked well. It's up $10. So I wish I would have did it, but that's what it's all about, is knowing where your out is. We had some outs. And that was, leaning on those lows from the week prior there before we had a 1,000-point rally. And that was, and we're talking back from, January 2nd trading when it looked like we were going to give a lot of that back. Well, it turned around on a dime, and we kind of been going straight up since. And now people are in chase mode. Portfolio managers are in chase mode. I will tell you, I've never made a lot of money chasing stocks, not in my day trading portfolio, not in my swing trading portfolio, not in my long-term investment portfolio. I do not like chasing my own stuff. If you make money chasing, by all means, continue to do it. But I think it's very difficult in the long run to make money chasing stocks. I like to buy. So stocks that are uptrends, I like to buy the dips. Stocks that are downtrends, I like to sell the rip.
It depends on your time horizon here, but if you look at the 2-for-1 stock split in Square, that all-time high at 101.15, as you mentioned, they took it, let's call it $50. I mean, $75. I mean, that would take back half of the move here. I mean, obviously, if you're buying it 62.44 and you're leaning on the low of the move, it's not as a favorable risk reward ratio. But just want to keep reiterating that these stocks are going to have rebounds, and as Harlan talked about yesterday, there's going to come to some resistance points. It's going to come to some 50% retracements. And you always like to see, the 50% retracement coincide with a couple daily highs to give you confirmation. And just as we're talking about the stocks, we're talking about the S&Ps. And like I said, on the daily chart, no daily resistance up to 25.92.
Let me see if there were any others in the chat being thrown around.
Lots of stocks. Like, I mean, ratings land. Their analysts
Oh,
are
there are a
super
lot.
busy here right now.
Yeah.
So busy. So, and let's just go look here at some of the main ones. You got like MasterCard getting a downgrade here this morning, Accenture getting an upgrade at B of A. You've got Honeywell catching a downgrade. You got Nordstrom catching an upgrade. There's just a ton. Like, it's 50 rating changes, some, medium ones there. But, First Solar was initiated at Barclays with an overweight, but then they put SunPower as an underweight. There's just a ton. Do you want to go and just pound out a few more there, Spencer? Because there's 50 of them. I'm not
trying to
kidding.
see if there's any big ones. Baidu downgraded Morgan Stanley.
Yeah.
General Dynamics downgraded Jefferies. So let's just run through the list. So we'll start with the upgrades here. Let's start with like Nordstrom here, and they're upgraded today at Morgan Stanley to neutral.
Up 84
Stock
cents.
has come back. But this one is, look where it was. We were $67. Go down in a month, basically lose down to 43. So you basically lose 35% in a month. So it's got the comeback trail. There's room to 50, easy room to 50. And retail had a great day yesterday. That was, we didn't give, we gave the biotech some love, but we didn't give the retail some love. Retail had a really good day yesterday. That being said, the trend's still not your friend here, and there's still lots of overhead supply when you get into the 50s. So I don't think it's easy sailing up here. I think it's easy sailing to 50. Above that, I think it gets dicey.
Coming up, trading up in the pre-market on very little volume, though. You just had a series of highs right here at the $49 level, 48.77, 48.81. So I think you clear 49 here. That's currently where you're trading. You do have some room up to 50. 50 and a half splits a couple highs from mid-December. And I just want to rip through a couple other retail stocks yesterday. Kohl's, that had a good day. That's looking to fill a gap that it had back. I don't know if this was earnings or
probably earnings.
70.55 if you're looking for a gap fill in that one. I did look at Macy's yesterday. That seems to have a big seller right at the 30.30 area, but room up to 31 after that. Walmart, that's on the rebound too. Several good days in Walmart. Actually, that kind of looks on the daily. That kind of looks like a Head and Shoulders bottom there, left shoulder, and then your bottom coming up. So room to the upside here in Walmart. And what are some of the other retail stocks that we like to talk about?
The Target. You want to do that?
Target. That stock on them. All these charts look really identical here. Big level in Target coming up here. That's 72.64. That was your high back on 1203, and that thing just got ripped after earnings. You got a gap to fill up in Target up to 77.56 if you can work your way into the $72 handle.
Other ratings we want to hit on some interesting downgrades today. Dennis mentioned Microsoft downgrade at Bank of America. So let's do MA first.
Okay, MasterCard. Nice looking chart here, down 222 with this downgrade. I don't know about this one. I mean, I think this is a little bit of reprieve for the shorts here. That got caught in this. So I'd expect to see some buyers in this one on the downgrade, trading down 222. You already have found buyers as 187.90 is your pre-market low. 184.44 is your two-day low. But with the market being strong here and shorts looking to cover, I don't think you're going to get that low on MasterCard.
Honeywell, we had two upgrades last week, one from RBC, one from Credit Suisse, both to outperform. Today they're getting a downgrade to neutral, so going against the grain is Oppenheimer on HON.
Once again, stock coming off its low of 123.48, only trading down 37 cents. Nowhere near yesterday's low, 133.15, 2-day low, 132.05. So these stocks coming off the lows like that and these downgrades, I just think you're going to find, at least way the market's acting here, I think you're going to find some buyers underneath. Dennis, any take on any of those stocks?
Just in damage control here,
Okay,
Joel. It's
all
hard
right,
doing
I
the
can
radio
tell.
show today because
Okay.
I've got so many
ahead.
stocks that I'm trying to
All right,
trade.
we'll hang out with
So
us because
if I sound distracted, guys, it's
Okay.
because I
Go,
majorly
man.
am.
Go.
A lot of people do a radio show and they're not active traders. I'm an active trader, and this is just full damage control.
I
for me
can
here
tell.
today.
I can tell, and I just don't know when you're going to come back in here. But we can.
Yeah,
we can,
really struggling here.
Go.
So some days you got it and you're in control. Other days it's like you just got some bad positions and you're trying to work out of the damage. So, that's what trading is all about. It's about damage control and trying to limit when you're on the wrong side of the trade, trying to limit as much as you can. In the pre-market, it's sometimes very difficult to do because sometimes there isn't a market. There's nothing there. So you kind of got to wait till the market opens, but you still know you're on the wrong side of the trade. So you're trying to work out of it as best you can. And it's difficult to do sometimes. So, and it gets frustrating at times. You can tell I'm visibly frustrated with today. And that's trading, and I've been trading a lot of years and I've been through a lot of difficult trades and I've been through a lot of good trades. And it's still an emotional game and it starts to work with you. And, right now I'm definitely, rattled here a little bit.
All right, go, because we got Nick coming up in 8 minutes.
Nick's
here.
going to help. So I would need a little break probably. I probably won't stay on with Nick because I'm going to need 8 minutes here, or in 8 minutes, I'm going to need to work out some of these disaster trades that I have on. But you know what? It's just movement. There is movement here right now. And obviously it can be good if you're on the right side of the trade and bad if you're on the wrong side of the trade. So let's go back here and just if you want to take the lead, feel free. But I just want to talk a few other stocks. AT&T been so resilient. Again, it's up here again this morning. We are flying into this ex-dividend date. I almost think it wants to go like $32. That's where the top is. That's where that high was from back in early December. What a comeback here for AT&T. I mean, Verizon is moving as well. But AT&T is just in rocket ship mode here. So this is a huge move. Basically, in 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days, AT&T is up 15%. This is a stock that typically moves 50 cents in a month sometimes. And you're talking about a stock that was 26.80. It's now 31.25. It's an incredible move here for such a widely held stock. It shows you how strong this rally has been.
And coming up on that $32 level, pair of highs back in December, right at that area, 32.01 and 31.90. You also visited that area with a 31.80 high back in October, on October 24th. And I know we talked about this yesterday. You got to go an ex-dividend. So there's a lot of people.
And that's, I believe, tomorrow. Yeah. I just got to go check my calendar as well. So that's why it's such a run up into the ex-dividend date. I got to think this is going to be the time where, it's going to set up very, very well from the short side. So I'll be waiting and, waiting for AT&T. And yes, it is indeed ex-dividend today. I just checked it. Verizon as well. It's going to set up well eventually here from the short side, but I don't like shorting them the day before. I like shorting them the day after. So we're talking about the ex-dividend day tomorrow. So getting short tomorrow somehow, and obviously it falls 50 cents, 51 cents, the price typically when it pays the dividend, but I don't like paying the dividend. So I usually like shorting it the day of the ex-dividend date.
And you just got to wonder if, let's say you were playing this thing for the dividend here and, you picked up a chunk at the 28 and a half level. I don't know. It doesn't look like anyone wants to take any profits, but when, we'll see what the closing price is today. We'll see what the adjusted closing price based on the dividend is. And that will be a very, very good number in AT&T tomorrow, as well as for Verizon. But if it can keep this momentum going, folks, take an eye at $32 double top at that area. Let's take a look at Verizon. Verizon on the move too, up 48 cents at 57.20. Not too much to look at here as far as resistance go. We mentioned this yesterday. There was a trio highs right at 57.50. What was our high yesterday? 57.26. So trading up 48 cents at 57.20. Keep an eye on that 57.50 area as well. SPOO's holding up 18 and a half handles here at 25.69. C-Roy is popping in here. He's talking about PCG, and I just think this thing is just in trouble again today. Trading down 94 cents at 18.01, exploring bankruptcy.
And I saw their credit got downgraded. Was it S&P? Yeah, it downgraded their credit, I think.
Who's going to buy it except for shorts? I mean, who can?
Well, that's just it. Like, why do you want to come in and, and say, okay, I don't think they're going to go bankrupt. I'm going to buy this thing. Buying a stock because you don't think they're going to go bankrupt sounds like a pretty bad reason to buy a stock, especially when they've warned of it already. We don't know what this, it could be a great buy. I mean, if they don't go bankrupt, maybe this company survives, maybe it's eventually going to come back, but so many unknowns here right now. Like, what if they decide, okay, yeah, we're folding shop and they're not going to get bailed out? I mean, it's a zero. So it's hard to say, what's going to happen here. So the possibilities are, one, they survive, they get bailed out, and the company comes back. Second possibility is they don't survive, it goes bankrupt, and the shareholders get nothing. So, I mean, that's why it's so wild here right now, because you got people placing bets both directions. I'm sure the options market is probably crazy in it too, so it's hard to play it that way as well. So I'm just hands off. I'm not no trade on this. I'll watch the story unfold, but the headline risk is incredible. It could just come out, that headline came out of the blue Friday night, because here we thought, okay, well, it's starting to stabilize, it's starting to look good, and then boom, comes out the headline, they're exploring bankruptcy, and the stock falls 25%. So it's so, it's tricky. Headlines are tricky in every stock, but when this stock's, talking about bankruptcy and stuff, I say, this is for somebody else to trade, not me.
Griffin 11, don't you think the hedge funds are buying the bonds and shorting the stock? I know you've used.
Well, it depends. I mean, that's always when a stock goes bad, the bondholders often get paid. But is there going to be money for the bondholders to get paid? We don't know. We don't know if it's going to go bankrupt. There's just a lot of unknowns. So, I've played, that way before too. And during the financial crisis, remember I was playing the preferred stocks that way because preferreds, have precedence over the common as well. And I can remember, when stocks were potentially looking at bankruptcy, buying the preferred stocks and shorting the commons. I did that with HSBC, and it worked very well. So there is a trade there, but we don't know here, and I don't know how much the bonds are trading at a discount. I can tell you the equity is at a significant discount to where it was. I'm not following the bonds on this. I do know it has a lot of traded preferred stocks, which I can tell you about as well. Let me just go look. I had them up on my screen. Yeah, so you're seeing most of the preferreds, which are $25. Like I don't know if you can. The symbology is always different from platform to platform, but like PCG.PRI, PCG.PRH. These were like 4 or 5% dividends. None of them are paying dividends now. And they're trading like 15, 14, 15, 16 bucks on the 25. So they're not trading like they're going bankrupt. If this was bankruptcy was imminent, I would think some of these preferreds would be trading a lot lower than that. So that's something to think about. But PCG, the preferreds are pricing like there's problems, but they're not pricing like bankruptcy is imminent here. I'm not seeing these things at $3-4 bucks. So that's the play. You're looking at that way too. Short in the common. I don't know what the bonds are doing. I don't have the bonds trading from me. I'm an equities guy, but the preferreds usually track it all pretty close. If preferreds only trading 50, 60 cents on the dollar, I don't think that's that great a deal. When I was buying the HSBC preferreds, I was trading them, at a discount of 80% from par. So that made more sense from a risk reward perspective, be buying the preferreds and selling the common. I don't know in this case. I don't know if the discount's there. Maybe the bonds are trading different, but the preferred's holding up that well. I would think the bonds are holding up even better because they get paid before the preferreds.
All right, 8:34. Let's call Nick Shaheen. He joins us every Tuesday. He's the author of Create Income with Option Spreads, sellspreads.com as well. It's been a few weeks since he was on because we had we had Tuesday off, right? I don't even remember. I don't remember the weeks, man.
2 Tuesdays.
Two Tuesdays. All right.
Yep.
Nick, how's it going?
Yes.
How was your New Year's, man? We missed you.
I missed you too. We kind of chatted a little bit in your absence. Dennis was online, so a little bit. Not much. It was good. It was nice and quiet. My family was out of town, but
wait, your family, they left you?
Yes, they did. They went to Costa Rica, which
how did you manage that?
I needed a downtime, and it was good for them to bond.
So
You know,
he's-
when my son is 17, so this is like kind of the age where he spreads his wings, so to speak. So it's a good time for him to bond.
so you said,
with-
I'll pay for you to leave me alone for a week. And that's what happened.
That is what happened.
Excellent. Excellent. All right. Well, Nick, we've been talking this morning about a bunch of things. I don't know if you've been listening, but one of the things we've been discussing is tech stocks with some momentum this past few days. I don't know if you've been watching the Rokus and the Squares and the AMDs and the Twilios of the world.
I definitely have. In fact, Square has been on my screen because for the last 2 weeks, every time we've had a big dip in the market or a big rally in the market, the financials were the incremental buy or sell. So if the markets were okay or down 0.5%, and then you see a huge move in the financials that will take the small cap effort to do one way or another, because big caps move one way or the other, but then the small caps will try to make the fundamental move, but then they get crippled with the banks. Because collectively they're probably 20% of it, and the bonds were moving up and down, and when those move, banks move. So Square is kind of like a quasi bank, and it's a momentum stock. So if there was money to flow in or out of banks, it'll probably flow in or out of Square faster, so it's easier to catch.
Are you been trading it at all?
I sold puts in Square, but I'm no longer long it. But it's definitely, I'm watching it every day. So Square had a descending wedge building, lower highs, lower highs, lower highs, and then suddenly at the end of last year, 24th was, I think, its lowest, and since then it has set higher lows, and now it's probably peaking above that. So here's the thing: if I'm long Square, I stay long it. If I want to start long Square, I don't do a full position, because I don't know if the whole market's still out of the woods. Technically, it looks good, but we're now back testing next from which we fell. So just like yesterday, we crossed over the February lows. I don't think anybody mentioned it. So they spent months talking about, we wanted to retest the lows, the February lows. We fell through them, 25.32 was it? And then we came up and took it out, and I hardly heard anything about it, if anything.
So are you applying that logic though to everything, or is that just for the tech names or whatever?
That's for everything. I mean, we have a lot of necklines from which we fell, right? So if you look at the S&P itself, and if you look at the level around 2590, let's call it 2600, that was a neckline that opened the floor. And from that, we fell to 23 something. So I'm going to post a daily chart. I don't have to get too fancy with it. And the daily chart on the S&P, the E-minis, for example, you can see that we're coming up to these necklines. So what's going to happen there? Usually necklines that are this violent or this important tend to become forward resistance so onus is on the bulls to say we can take it over again and start using it as a stepping stone to continue higher. I am long, so I'm not bearish markets. I do have a few credit call spread positions just as a balance, and I'm okay if they lose money because I am long overall. But I don't know if we're completely out of the woods. So there might be another little dip, maybe even a little bit bigger than people expect. It probably will need a headline to come out bad. So I'm just saying that I am long, but I'm still a little bit cautious. This is not the end of all the headlines.
What about Tesla here? Big vote of confidence from Larry Ellison. We knew it was a large position of his. He said so a few months ago. Now we find out it's a very large position. Thoughts on Tesla here?
Sure. Tesla is, I am long. So I sold puts at 195. I trimmed some, and they're still very profitable, and I'm staying in them. I don't see a reason to close them. They expire in the middle of the year. So it averted a disaster below 294. By disaster, I mean it would have gone to like 260 perhaps. I charted it. And this is just, again, a daily chart. It has a neckline. So above 330, 340, I should say. It should get some bids to maybe 365, which is insane because this is as frothy as perception-wise as they get. So scared markets don't buy froth or junk, and here we are buying. What led the rally last week? Netflix. So that's another perceived frothy stock. So don't send me emails about me calling them frothy. That's what perception is. And they burn cash, and they're not profitable. Let's put it that way. So fundamentals are questionable based on a balance sheet or an income statement or both. But here they are getting bids, strong bids, like the strongest bids. So this is a market that is sick and tired probably of feeling bad. Yesterday I tweeted, is anybody else, they brought somebody who's again pointing out all the pitfalls. We know what they are. Just tell us, what are you doing about it?
So what other names are, to use your word, frothy here?
Well, all the momentum stocks, Square is one of them. But if I were to go long banks, I'm not going to take banks. I'll take the financial tech, which includes Square. It's probably the fastest runner there, PayPal, and then Visa, MasterCard. Those are attractive to me. People want to chase banks. It's been a tough trade, so why do that? So if I were to go long stuff, I'd go the semis. Yesterday, Micron perhaps, shut the door on sell semis meme. So this is like the cheapest of them. I think it's sold in the twos as far as price to earnings ratio trailing. That's insane for a company that is as established as Micron. So SMH maybe. So pick an ETF in the semis, or if you know a specific stock. I stayed long CRM through the last dip because it held up great relative to everybody else. When Apple had its dizzy, CRM held up pretty well, relatively speaking, and the calls there paid. I think I had one drawdown day in them. So the timing was great there. Went long the small caps, those were up. We had huge hits on a lot of momentum stocks. I was a long Roku this time. I wasn't fast enough to catch it. So it's okay to miss a few trades here and there. So, but there are a lot of stocks in areas. NVIDIA went long in NVIDIA, and that's up almost a double. So there are good names. Anything that was running before the tizzy will continue to run after the tizzy. Amazon, to mention the obvious. I think Amazon, people are missing how powerful Amazon is. I went to Kohl's last weekend, and I knew that they had a return desk in there. So I asked somebody, do they have people working? I didn't know how it was. So I finally went in. They have a whole store inside of store, a whole setup. It's all Amazon. They have Amazon people behind the desk. You can shop. They have stuff in there you can buy online. It's incredible. So, and I also read somewhere that Amazon wants to expand its footprint, like the Whole Foods. Are they able to buy Kohl's? I have no idea, but it's an interesting concept. So momentum stocks will run fast. Whatever was running will continue running. We'll go back to running, I should say. But I have to be conscious of where we came from. Like if I'm looking at Micron, now it's approaching the 36 level. I don't know what it's doing this morning, but that was a big ledge from which it fell. So I can imagine that they're going to fight over it again. So it may hit some resistance there.
Well, speaking of Amazon, I saw a headline that from a few months ago that apparently a lot of babies' first words are Alexa. That's how powerful Amazon is. But question from the chat near here. Speaking of Micron, how are you trading it, Nick? What options?
Micron, I would sell puts in it. I did sell $31 puts, and now they're not in the money. They went in the money a little bit, but I didn't mind owning it. So I can stay in those. Or I could buy calls way out in time, or buy the stock. And then sell calls against it while I own it. So it all depends on personal preference on how people want it. But whatever I do, I want to put time on the clock. So all the calls I bought were out to March or longer. Sometimes I did some February, because I don't want to lose just because I was off a day or two. I know, Joel sometimes dabbles in options, and we go back and forth about, why buy this week or next week versus going out in time. I prefer going out in time, especially if I have a tradable thesis. So if I think Micron is going to catch a move up, then I'll buy upside calls in it. But it's probably easier to play the momentum, not easier, more exciting to play the momentum stocks. AMD has been the blessed child all year last year. So maybe it goes back to running faster than everybody else. Intel is pretty darn cheap, CEO or no CEO. Intel might be a good one because it's a proven winner. But I chose NVIDIA in the bunch, and I think I chose well. I like the company, and if they were right about its powerful, stance in all of the right spots, then this one will have a lot of upside.
And how about good old General Electric here coming up on the $9 level? You got to talk about that stock since it's
Sure.
666 low here. One of the units supposedly being valued at $40 billion, but I didn't see Apollo ponying up for that. Big old run in G. A lot of probably sellers at the end of the year here. Any upside targets or a place where it'd be a little more attractive? I was hoping it was going to get down to 8 this week, buy it on the cheap, but I guess a lot of other people had that idea as well.
I drew an inverse head and shoulder off of below 8, somewhere the neckline, and it's almost at the target there. And it almost, if you look left, it coincides with a leg lower that started November 8th, and it was 9.14. Let's call it 9.2. So what happens when it gets there, if it gets there? That would be the question. So if I start GE here, I'm hoping that I'm not late to a rally. And I know Dennis was long. I don't know if he stayed long. So it is, yesterday I heard somebody say the safer bet is GE, and they were talking, including names like Apple and all of that. I almost fell out of my chair. So safer bet, you mean better trade? I mean, safer bet, really? I don't, better trade is okay, but safer bet, no.
Well, it's safe. They need to raise a lot of money, and they need to sell.
Safe?
They need to sell a lot of stuff and raise a lot of money. But besides that, they're almost near bankruptcy. But
I see.
Besides that,
Okay.
it's pretty safe, I think. I mean, if you don't mind this company teetering on the brink of bankruptcy here, it's pretty safe, I think.
No, literally, and it was one of the stand-ins at CNBC, Grasso or somebody like that. So anyway,
I think they need to stop making the light bulbs last so long, because then you just go back and you don't buy them as much.
light bulbs, do they make LEDs? I don't know. Nobody's buying regular light bulbs. Do they make LEDs? If
Probably. Nick, I want to ask you about Intel here. This is one of those on my list. It's held up here kind of well last couple of months here. Thoughts on Intel?
I like it. It's not crazy valuation. It is well established. It had been the dominant player in the PC market for a long time. So I can't find a reason why I don't want to pick it. I mean, it's like 11 PE, and when I talk PE, I talk trailing. So actual 12 months past rolling. And so it's pretty impressive. But now it's in a zone. Let me see if I can pull up a weekly to show that in fact it is a zone. Yeah, the weekly probably shows it best. So it has like 2 levels of trade, and one was around the 38, and then it broke out of it a while back. And here we are in the middle of the new level. And it's easy to see that anything can happen from just the chart itself, up or down. And I like it, and it will be market dependent. So if the markets are rallying, it has an opportunity to go towards 50, and that should be a point of resistance, but also an opportunity, because then it would look like a cup and handle-ish. So it's a neckline that would break, and if that happens, then 54, 53 is the eyeball target from there. But all this needs the broader market, the whole market to move. So it's not going to rally without the market. And that goes obviously to most other stocks. But so my concern is that.
What about Overstock here? Here's a stock that got near the century mark. We got up to 89.80, and we've come all the way down here. I mean, I guess if you're looking for a laggard, OSTK here, 1554 was yesterday's high here, Nick. I don't know if you follow this fundamentally here, but what do you think of the technicals on this one?
Well, you can't get lower than this, I guess, as far as its history. So if you look at, 2016 are the levels that we breached or got to almost. So I don't know anything about the fundamentals, but if you like to buy wedges, this is a descending wedge that this is a weekly chart I just posted. So I did bank on it last year. I took some calls thinking that Bitcoin might bounce, and this was Bitcoin related at some point. I don't follow it. I do look at it technically because of some of the people that I talk to do follow it. So I've marked up the chart. But from here, it's just, obviously market dependent, headline dependent. I don't know what they do. Are they still related to Bitcoin? But the chart is wound tight, and it's at the lows that it's ever been. So if somebody wants to bet upside for the whole year, a long-term bet, I can't say no, you shouldn't.
You had to mention Bitcoin, so I'll get your take on that. I mean, we had a little bounce. It looked like it was bearing down on. Didn't get under 3,000. These are the futures I'm looking at. Got to 3105. Just struggling here at 4,000. Any technical thoughts here on Bitcoin?
Sure. I did a couple of videos on Bitcoin, and I said it could break the 3,000 if it loses 6-ish. I did the video, I don't know when, a long time ago. So Bitcoin is one of those things that I don't see it as a currency, but it is something to trade, just like gold. Not that it's as valuable as gold, but I'm saying that it has value because people want it to have value. Same as gold. There's no reason why gold is valuable other than people want it. Same with Bitcoin. So, and I think it has enough fans that, it will have value for as long as they want to own it. So technically, it's stuck at a place where it is at in 2017, September, and then it broke out, and then everybody went mad. I don't think everybody's going to go mad over it again. So be realistic with your upside expectations. And from here, you'll have to trade the short term, but I don't know how you would do that anymore. So if it breaks out of, like right now, I think 4,500, 4,490, 4,500 is a short term inverse head and shoulder opportunity. I'm just going to I'll post another short term chart on it, and I'll just draw a line as opposed to draw the actual neckline. So it's not surgical in my drawing, but this would be the next technical opportunity on a short-term basis from Bitcoin, but I really don't know how I would trade it. So right, it's up to you.
Let's just finish up with Apple here, and I mean, the market has made one hell of a recovery without its second biggest component in the S&P, under 150 now here. Any setups here you're looking at in Apple?
I hate what Tim Cook did with his company. I really do.
That for a long time.
Yeah, I just he unless he has a rabbit inside that somewhere hidden, he will be known to be the guy who broke a beautiful machine. So Apple is. I would not buy calls in Apple. Let's put it this way. I did sell puts in Apple for $5 ish for January 2020. I bought them back for $360 yesterday. So I'm confident enough to sell puts in it because it's still a formidable balance sheet and affordable P&L, but I wouldn't buy calls in it. So if I wanted to bet upside on the market, Apple would not be it, because I have seen nothing from management. And there is a big gap to close up to 155, but I would rather buy calls in the SPY or the QQQ to bet on that, because there have been so many people squawking about phone demand, and this time they were right.
Yeah,
and if they go and miss the earnings numbers after this big warning, whoa, so in fact, it could probably break the market rally on its own. Yesterday, we saw some drag from it. It was down 1% when the market wanted to go a bazillion up. So there is some concern there. So I wouldn't buy calls in Apple. If I wanted to bet on Apple, I'd bet on it indirectly via a QQQ probably, or the NASDAQ, any plays with the indices or the ETFs.
All right, Nick Shaheen, create income with option spreads, sellspreads.com. Nick, as always, thanks for the time, and we'll talk to you in a week.
Thank you so much.
All right, Joel, S&P, is anything new?
Continue to roll higher here, Spencer, up 22.75 at 25.73 1/4. We just made a fresh new high at 25.74. So buyers firmly in control here this morning. I see all the top stocks in the S&P trading up pretty much.
Everything.
Yeah.
Everything's green.
So it's a buy everything kind of day here so far. Dennis, what are you seeing? You able to?
Yeah, it's across the board, Joel. You're exactly right. Everything is green. I'm looking at my screen here, and I'm struggling to find anything red. I mean, you had a warning last night, which we didn't even talk about, from Samsung. and they warned that their profits are going to be significantly lower. The stock opened lower overseas and then actually climbed back, and I don't know where it ended up, but at one point in time was actually green. So you got stocks shrugging off bad news, and obviously there's some articles there saying that was mostly priced in, but just incredible resilience in the overall market. You're seeing overseas, significant warning from Samsung, and they kind of shrugged that off too. So you're not seeing any fear at all here right now. The fear you're seeing right now is the FOMO, the fear of missing out, and that is like in full. That's what's causing these rallies here, because people think that this was the dip and we've missed it. We've got to get in here now. They're chasing. I think the people, I think that they're going to be wrong here eventually. But I tell you right now, you've been rewarded the last 3 days if you've been chasing. So I always say, I never made a lot of money chasing. I tell you, in the last 2 days, if you were chasing stocks, you're making money.
Another thing, just the character of the market here, when you're at frothy all-time high levels and you come out with these warnings, boom, people are willing to get out. I'm going to sell. I'm going to take some profits. And here you're coming off a major bottom now, so obviously not all the shorts are out of the market. So you're hoping, man, I hope there's a negative tweet or some bad news in the company, so I can start to peel. It's because you're buying now. You're buying with people that are leaning on the new lows, and you're buying people that are trying to cover shorts as well. So how the complexion market can change. I mean, how everyone, what is it, 2-3 weeks ago with the big hit? Oh, the Fed doesn't know what we're doing. We're going to a full-blown recession.
Yeah, and we knew it was going to rally eventually. I just didn't think it would be sustained this long. I called the rally. I mean, we were down, we were flat. I called for 1,000-point Dow rally there, and I didn't position myself like massively long, because, and obviously I'm still, under invested in my longer term stuff, because I thought it was going to be a pop. I thought it maybe last a couple days and then eventually start to drop. Well, this has been sustained for a while here, so it gets me a little bit nervous on the longer term stuff, but I'll still say on the SPY 260. It looks like where we want to go. It looks like that's where you had support back in October. That's where you had support in December, early December, before we eventually broke down from it. Just classic technical analysis. Old support becomes new resistance. I think that's where we're going to struggle. So I think you got about, maybe 30 handles left in the S&P, maybe, $3 left here in the SPY, but I think you're going to start to run out of gas when you start getting up there. And I don't know if we're out of the woods here too. Maybe we are. And, that's why I never go to 100% cash, because if you're wrong and you're 100% cash, then everybody else is getting wealthy without you, and inflation and everything else. So you never want to be 100% cash. But I'm just looking here, and at 40% cash, I don't like the rally as much.
Just an interesting note here too, and we don't talk VIX a lot. We talk about, and for me, it's the average daily trading range, and talking about how the market has to calm down a little bit. It had these 100-point swings and stuff. Yesterday was really a tame day. You only had a 44 handle range in the expected.
Tame day.
It was, man. It was like nothing going on, because you were having 70, 80-point ranges. So, the buyers and the sellers are starting to come in here. We're getting the Titan ranges, and let's see here. Let's see see if the bulls can push it through 2,600. Spencer, did we cover everything?
We almost did. I would have liked to get Dennis' thoughts on this new exchange that the brokers are starting. Dennis, I don't know if you have time for a minute or two.
Yeah, I can give you a quick thought. So announced yesterday, the members exchange. So you got a lot of brokers getting together, going to form their own exchange. And I mean, you think about it from a broker's perspective, why not? Why would you not do something like this? Here you are, you're paying ridiculous amounts for data from the exchanges. What do you really need the exchanges for if you're a broker? I mean, you've got orders, you've got customers that, all the exchanges, their orders that are coming from the exchanges are coming from the brokers. So the exchange is basically just the middleman in this case. And when you look at it from that perspective, and, they're sick of paying the data that they are. So we're like, hey, already the brokers, internalize a lot of flow. They got a lot of off-exchange market makers that come in. I've talked about that stuff before, and I think that's not transparent enough. We need some more transparency there. And obviously, I've been concerned with the public market not being disadvantaged to a certain extent, but we're not going to get into all that. But just they're already taking and executing most of the market orders themselves. Those stay in-house, or they have an off-exchange market maker taking the other side, and then they send the limits over to the exchange. Well, why not keep the limits on your own books too? So it makes a hell of a lot of sense from the broker's perspective. From the exchange's perspective, I'd be very scared. I mean, you had the gravy train for a lot of years here, and that got broke. Obviously, you got a lot of orders not making it to the exchanges anymore, which we've talked about. Over 35% don't even go to the exchange. And obviously, off-exchange market makers, dark pools, all that, making up that 35%. But when you look at it from, exchange perspective, okay, well, then they started, selling the data and raising the cost. That's how they've been making the money. Well, if all of a sudden the exchange brokers start having their own exchanges, you don't need that data as much. So that's scary. If I was owning NASDAQ, NDAQ, if I was owning, you could go over and look at ICE, I'd be nervous. I'd be nervous holding those stocks here right now, because the gravy train that they've had is starting to be fully attacked. And it's being attacked by their own customers, which are the brokers. So that is a scary concept if you own those stock exchanges, the public exchanges. I would not want to own any of those things right now.
Just one other fundamental note, or we'll let Spencer wrap up after this. We do have the president will be making a speech. I believe it's on Wednesday, and that will be, talking about the government.
I think it's tonight. I thought it was tonight. I thought it was
Okay.
tonight. It's tonight at 9. It's going to be a short speech, which is bad security, but I doubt that'll move markets.
You don't think so?
No, no.
Everything moves markets, seems like.
Okay. Okay. Well, on that note, that's going to wrap our show for the day. Thanks to Nick Shaheen. Thanks to all of you in our chats, both on YouTube and premarket.benzinga.com. On tomorrow's show, we are joined by Greg Harmon, the founder of Dragonfly Capital Management. In the meantime, if you missed any part of today's show, catch our podcast, iTunes, SoundCloud, Stitcher, TuneIn, and Google Play to hear our lovely voices again. Please remember, all the information from our show is for informational purposes only and not meant to be investing advice. On that note, everyone, have a good day, and we'll see you on Wednesday.